This is Jim Emter, Van Ahn Company, Alexandria, Minnesota, with your closing grain and livestock comments for May 25th, 2018. Corn market up 1 to 2 1/4 on the day. Beans up 5 to 6 1/4. Chicago wheat up 12 to 13. Minneapolis up 8 to 9 1/2. Kansas City up 14 to 15. On the week, we had the corn market up 3 1/2. Beans up 43 cents. Chicago wheat up 24 3/4. Minneapolis up 14 3/4. Kansas City up 25 1/4. Pretty wild week, back forth action. Reports start the week that China and the U.S. are working out details, and that's what got the bean market excited, and the rest of its history. We had a pretty strong close, another good week for the grain markets. Next week, though, make or break. Monday holiday into a Tuesday trade can make for dynamic market movements. Right now, if we are at the price counts we need to be at, if we can exceed these levels, we open up price counts to $4.20 to $4.28 off July corn. New crop $4.28 to $4.40, so that's the range we think producers want to be looking at doing some marketing, and the next level we can possibly get to if we can get the good trade next week. Beans up into that $10.82. Next count after that is $11.38 if we can make the trade, and wheat market $6.89 and $7.24 if we can make the trade. What do we mean? We need a strong start to next week. What's going to dictate that? Weather. We're going to watch weather conditions very closely. Fund movement. We're going to get a review here this afternoon yet, but it's really going to set the stage for, did that last part of corn in Minnesota get planted? How good is the bean progress, and how is the emergence? So far, so good in most areas, and that could be the devil's advocate here to our bull potential. If we struggle here and cannot exceed and get going next week above these current levels we closed at, you open up the price counts of a break potentially down to $3.88 to $3.95 in corn. Not a big break, but 10 to 15 cents nonetheless. In beans and wheat, though, there's 50 cents of risk if we cannot get up and get going here, and that'd be back down towards these lows we've been struggling at. And we lack that punch right now. I'm not sure we've got the bull punch. I think we can get it here over the next 45 days, but going to be very important that you're using your seasonal selling approach along with these price targets to make good marketing decisions. Give Van Ahn Company a call, and we can help you out with those details. On the feeder cattle side of things, up $1 to $1.62 1/2 on Friday. Live cattle up 25 to 57 1/2. Hogs down 62 1/2 front, up 77 1/2 in the deferreds, and just kind of a mixed trade there as we look to the hog market. On the week, feeder cattle up 12.70, but don't let that deceive you. Obviously, the expiration of the May, the big part of that. Live cattle on the week up 225, hog market down 50. On feed report, right in line with expectations. On feed at 105 versus 105 expected. Placements 92 versus 91 expected. Marketing's 106 versus 106 expected. So placement may be a touch higher, but still, this is kind of, we're beginning to see that pattern of smaller numbers of placements, and I think that's important to some of the bullish enthusiasm we've got. We feel we've got a double bottom in place, and we feel like the cattle market can begin to accelerate to the top side here. 114 to 115 live on very light trade. 108 asking prices from packers. Bidders looking for upwards of 114, and just not a lot of cash trade here this week. Hog market, on the other hand, needs a good jolt. I just think we lack that, looking for more of a sideways market as we work ahead here. You can stay tuned. Tuesday is going to be a wild day. This has been Jim Emter, Van Ahn Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great weekend.